Hey, what's going on, you guys? Welcome back to Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to do a brief video about DraftKings Stock and whether you should purchase some shares during the dip. So guys, I'm actually really upset at myself. I wrote a script about DraftKings Stock, this script that you're listening to right now, about, 5 days ago, back when their stock price was at $40. And I was going to tell you guys that you should consider investing. Now their stock price is nearly $50 a share. And it's not like they're completely out of the henhouse to invest in, but I really wish I would have hustled along and got this video out sooner so it could have helped you guys out even more. But guys, back in early October, their stock was sitting at a peak of $64 a share. So even since they've recovered a little bit, they're still at around $49 a share. That's still $15 a share shorter than their peak was back in early October. By the way, if you're not sure what DraftKings really is, it's sort of like a FanDuel. It's like a one-stop shop for fans to sort of gamble on games, NFL, NBA, all those big major sports in a fun way. You know, it's usually not just straight up, taking a spread or anything like that, but it's drafting a fantasy team and betting $10 that way. And it also allows fans a better loophole because a lot of times within your own state, you might not be allowed to gamble online, but through sites like DraftKings, there are some loopholes that allow you to do so. So recently, the company brought out some news that they were planning to raise $1 billion after they just had a record quarter, selling 32 million shares. So there was a large sale of stock, but many people see this as a great thing for a long-term investing standpoint. They are a sports betting company, so of course, coronavirus took away a lot of their potential revenue. All the sports were taken off air and they weren't being played because the spread of coronavirus, we're trying to slow it down. But now that sports are getting back into the swing of things, the NFL is here, the NBA should be back in its regular form next season. Well, now they're starting to get back on track with their sports betting. While Corona is having quite a third wave, many new cases and a lot of new worry, there is going to be a vaccine out probably within the next few months from Pfizer rolling out to millions of people. So that should help slow the spread. And again, we're thinking long term here. So yeah, maybe the next few months or maybe even the next year could still be a little rocky for DraftKings. But in my personal opinion and the personal opinion of many experts and analysts, coronavirus shouldn't be as big of a deal at this time next year, and sports should be back in full swing. And I truly don't see another full economic shutdown. We need sports. It helps the economy. A lot of money goes into sports, and a lot of money goes into sports betting. It's also great to see the Big Ten and the Pac-12 back at it. That'll only help out this company further. DraftKings has even added a whole new segment to their business, brick and mortar. They're planning on opening a real-life physical betting shop in the DC area where people can actually go in and make sports betting in the actual shop instead of doing it online. The DC area is where the Wizards, the Mystics, and the Capitals play in. This could start bringing way more money into their pockets if they can start doing this in more areas, because not only will they be getting revenue from the sports betting done within these shops, but I'm sure there's also going to be entertainment within the shops they'll make money from and different food and drink purchases within these shops. Last earnings, they had around $1 billion in cash and $0 in debt. I really like looking at their financials. They bring a smile to my face. The company, now this is the company saying this, but they are projecting a 50% revenue growth in the year 2021, a 50% increase from the previous year. And honestly, this might sound like an unbelievable figure, but I can believe it. With such a rough year in sports this year, and the economy's getting back to the swing, people are going to have more money to bet, people are going to have more time to watch sports, and I think it's very possible. So guys, again, I really wish I would have ended up coming out with this video, a week ago when I could have said buy this stock at $40 a share, and now it's at $50 a share. However, that shouldn't deter you. I still think this company would be a great long-term investment. Again, we could see some bumps in the road in the next few months, even years, but I think 10 years from now, investing in this company, you'll be very, very glad that you did. I love what they're doing over there. However, do your own research and make your own decisions. I am not a financial advisor. Anyway, thank you guys for watching, and make sure to check out more Business Buzz videos. I'll see you next time.